We are live from MBA Servicing. My guest today is Mike Cox, CEO of Proctor Loan Protector. Mike, so great to talk to you today.
Diego, thanks for having me. It's great to be with you here in Dallas.
Yeah, absolutely. So before we dive in, could you briefly introduce yourself and your company, Proctor Loan Protector?
Sure. My name is Mike Cox. I'm the CEO of Proctor Loan Protector. We are a company that specializes in providing services and solutions to mortgage servicers. In the market, it's known as lender-placed insurance. We provide a lot of escrow services on behalf of our clients. That includes tracking of homeowners insurance to make sure that the borrower has complied with the requirements of the mortgage instrument. When they don't comply, we send out notifications to make sure that they understand that they need to make some changes. And ultimately, when they don't, we'll insure the collateral on behalf of the lender.
So insurance is a really hot topic right now. We were just discussing before we started recording, especially in states like Florida and California. So how are you helping your clients with respect to insurance?
Yeah, that's a very good question, Diego. It is on everybody's mind right now, especially in this business, because affordability is being impacted by the rising cost of insurance. Not only do you have rate increases in states that are prone to natural catastrophes, you have the rapid increase in the values, which increase the insurance on top of it. So, for example, in the state of Florida, with the numerous hurricanes the last couple years or the wildfires in California, most insurance companies are for-profit companies. They deploy capital, and the goal is to return an adequate return, for the company. And because of the size of these natural catastrophes, they're really struggling. So our role is to help the borrower understand that they have this requirement to provide insurance. It's also one of the Fannie-Freddie requirements that support the loan. And when they don't, we try to make sure that we're insuring that property. Ideally, our insurance is meant to be short-term. Because ideally the homeowner is best served if they buy a homeowner's policy that's going to insure their personal property, their loss of use, and the proper liability coverages.
So insurance markets are very different from state to state, but a lot of your clients operate on a national scale. How do you help them with that issue of different states having different insurance markets?
Well, in our line of business, I think the first thing to understand is the requirement for the mortgage is pretty consistent throughout the country. And so the perils themselves have to be included in the policy. If you take a state like Florida, for example, one of the things that's changed is the homeowners carriers have been able to call out hurricane differently than wind. So for example, if you take a state like Michigan, your policy is likely to have a wind deductible. And in Florida, you might have two deductibles. One will be a wind deductible, and then one will be a named storm deductible, which will be higher. And so if you look at California, for example, because of the crisis with the wildfires, the state fair plan is insuring a lot of homes now, and there's some limitations in the state fair plan that has, and you have to make sure that the homeowner is complying with the mortgage, and ultimately that is what our requirement is.
So we've had several natural disasters that have happened this year. How does your company, Proctor Loan Protector, step in when a natural disaster hits?
Yeah, that's a really good question. When a homeowner has a loss to their property, it's pretty stressful for them. So for a lot of times they haven't had this before, and this is the first time that they've learned what they've agreed to in their mortgage document. And what I mean by that is if you own a home and you buy a policy, you have to add them as a mortgagee clause. And the reason for that is the lender wants to make sure that their collateral is going to be protected. So ultimately, when you suffer a loss, there is a sequence of events that have to be followed to make sure you're complying. And so what we try to do is, there's really two ways that we look at this, because part of our service side of the business, we call it loss drafts, or it's also managing the construction draws from an insured loss. We try to make sure that the borrower understands the requirements, communicate with them clearly, provide them with some tools to help them navigate through the process. And then on our lender-placed side, where we're insuring the property, we have a catastrophe plan. So whenever there is an event, we have adjusters that are dedicated to us. We get the adjuster out to the property as soon as possible. We get the full report back in, and then we try to push the money out when appropriate as quickly as we possibly can, because the homeowner is looking at their biggest asset in most cases, and it's suffered a loss, right? And so they want to get the property repaired and try to get back to normal as quickly as possible.
So there are certain states where private for-profit companies are pulling out of the insurance market. And it's not just California and Florida. There are other markets where that's happening as well. How do you see that issue and other issues impacting your business and your clients over the next 2 to 5 years?
Yeah, that's a multi-level question, right?
Yeah.
There's a lot of layers there. I think from the homeowners market, there's going to have to be a lot of cooperation between the states and the insurance companies. And what I mean by that is in some states, they've been very limited at what they've allowed the carriers to submit in regards for their premiums. You might have saw the headlines yesterday. State Farm filed for an immediate or an emergency 22% rate increase in the state of California. That's pretty substantial.
It is.
I have no insight on what they're planning to do, but that makes me feel like if it doesn't get approved, does that mean they're going to pull out of the state? And if they do, that creates a bigger vacuum, right? So if you look at certain states like Florida, for example, and I have a home in Florida, I think that if you strengthen the building codes, you can really help with some of this. And an example would be, depending on where you live, if you required metal roofs or tile roofs versus asphalt roofs, you make the home more prepared for these big events, right? And so you won't have a lot of these kind of losses, and then when you can mitigate the losses, you can theoretically lower your premiums. So I think in various areas, it's going to take a lot of cooperation for it to stabilize. And I think the next couple years might be a little choppy because one of the things that I don't know if everybody understands, but we're in the business. We look at the big catastrophes like Ian and Milton and Helene and the wildfires, but on average, there's been 75 catastrophes a year or more. And the insurance industry defines that as any insured loss that generates $25 million or more in losses. So we're pretty experienced when it comes to this, and a lot of things that we might not see. So for example, there might be a convective storm in the Midwest, and it might sweep through Oklahoma or Nebraska, cause widespread loss, but it doesn't necessarily make the news because it doesn't look like the California wildfires, right? But if you live there, it's impactful to you.
Right. Well, Mike, this has been a really interesting conversation. I want to thank you again for joining me today.
It's my pleasure, Diego. Thank you.
Yep.
Nice seeing you.